Is the silver price correction over? Insights on SLV. Is silver's price correction over, or just getting started? This year, silver has been a standout performer, flirting with the $40 mark recently. But here's where it gets controversial. Market trends don't always follow a straight path. Over the past week, silver has retraced its gains, approaching a pivotal moment that could reshape its trajectory. Today, we're analyzing silver through the lens of the Silver ETF, SLV, a popular tool for tracking the metal's performance. The current price is hovering near a critical moving average, a key indicator that may signal whether this pullback is a temporary pause or the beginning of a new phase. Note, the following charts are powered by Market Surge, a platform developed by Investors Business Daily. https://get.investors.com. UTM source Andy Nyquist, UTM Medium, landing page, UTM ID, SCI Influencer. As an IBD partner, I advocate for their tools, which offer a blend of educational resources, technical analysis, and fundamental data. Looking at the SLV chart, we see a sharp decline, breaking through both the 20-day and 50-day moving averages. This could mean either a rebound or a deeper correction, depending on how traders react. While support levels may emerge here, some analysts argue this could be the start of a more significant drop. That said, all three major moving averages are trending upward. This suggests a potential rally around the $31 to $32 range, a level that coincides with previous highs in October and March, as well as a key gap from early June. It's a reminder that history often repeats itself in markets. Twitter, @AndrewNyquist. https:// The author may hold positions in the securities discussed. All opinions expressed are solely theirs and do not reflect the views of any other entity. And this is the part most people miss. While moving averages provide clues, they're just one piece of the puzzle. What do you think? Could this be the end of the correction, or just the start of something bigger? Share your thoughts below. Silver prices drop amid U.S. tariff deals and NFP data focus. Silver prices are taking a hit, and here's why. The easing of U.S. tariff tensions is shaking things up. Currently trading down around 0.5%, near $36.50 during the European session, silver is feeling the pressure. The big news? The U.S. is confirming tariff deals with key trading partners like Japan, the European Union, and South Korea. This is a major shift from the trade war anxieties of the recent past, but here's where it gets controversial. Is this really good news for everyone? While these deals are intended to foster stability, some argue that they might favor certain nations over others, potentially creating new imbalances in the global economy. What do you think? Are these deals truly a win-win, or are some countries getting a better bargain than others? Adding fuel to the fire, investor confidence is growing that Washington will eventually strike a deal with China. This optimism is reducing the demand for safe haven assets like silver, XAGUSD. Think of it this way. When investors are worried about economic turmoil, they flock to safe investments like silver. But when they feel more secure, they tend to move their money into riskier, potentially higher-yielding assets. Safe haven assets, including silver, saw a surge in popularity following President Trump's initial tariff policies. These policies were, in part, aimed at reducing the nation's fiscal deficit. The fear was that these protectionist measures could trigger a damaging global trade war, sending investors scrambling for safety. Theoretically, increased global economic uncertainty boosts the appeal of safe haven investments, and this is the part most people miss. It's not just about fear, it's about perceived risk. Even if a trade war doesn't fully materialize, the threat of one is often enough to drive investors towards safer options. Adding another layer of complexity, the strengthening U.S. dollar is also weighing on silver prices. The DXY dollar index, which measures the dollar's value against 6 major currencies, is hovering near a fresh 2-month high around 100.00. Technically speaking, a stronger dollar makes silver a more expensive investment for those using other currencies. Imagine you're a European investor. If the dollar is strong, you need more euros to buy the same amount of silver. Why is the dollar so strong? Traders are scaling back their expectations for interest rate cuts by the Federal Reserve at the September meeting. This shift is driven by positive economic data, including strong Q2 GDP, a hot personal consumption expenditure (PCE) inflation report for June, and signals from Fed Chairman Jerome Powell that there's no immediate need to cut interest rates. Higher interest rates from the Fed are generally bad news for non-yielding assets like silver. Silver doesn't pay dividends or interest, so it becomes less attractive when interest rates on other investments are rising. Looking ahead, all eyes are on the U.S. Nonfarm Payrolls (NFP) data for July, which will be released later today. This report will provide further insights into the health of the U.S. labor market and could significantly impact the dollar's value and consequently silver prices. So, what's the takeaway? Silver's price is being influenced by a complex interplay of factors, including trade deal developments, investor sentiment, dollar strength, and interest rate expectations. It's a volatile market, and staying informed is crucial. Do you think the easing of trade tensions is a temporary trend, or will it continue to put downward pressure on silver prices? Share your thoughts in the comments below. Silver price forecast. What's next for XAGUSD? After breaking key support, imagine you're tuning into the financial markets and suddenly hear a loud ding, signaling a significant shift in the silver market. That's exactly what's happening with XAGUSD, as it plummets below crucial support levels after touching a 14-year peak of $39.53 on July 23rd. But here's where it gets controversial. Is this just a temporary blip, or are we witnessing the start of a more substantial decline? Silver, trading around $36.50, has taken a nosedive of over 4.5% this week, struggling against the backdrop of a robust U.S. dollar. The metal is currently flirting with its 50-day exponential moving average, EMA, at $36.54, which serves as immediate support. However, a dip below this level could open the floodgates, leading to further losses, with the 100-day simple moving average, SMA, near $34.65, acting as the next potential barrier. Let's dive into the technicals. On the daily chart, silver has breached the ascending channel that had been its lifeline since early April, indicating that the upward momentum is waning. Momentum indicators, like the Relative Strength Index RSI, have dipped to 40, signaling weakening strength and hinting at oversold territory. Additionally, the Moving Average Convergence Divergence (MACD) has flipped negative, pointing towards more downside risks. When we zoom into the 4-hour chart, we see silver breaking below both the 50 EMA and 100 SMA, reinforcing the short-term selling pressure. Prices are inching towards a key demand zone around $35.30 and $35.70, which might provide some near-term support. However, with the 4-hour RSI plummeting to oversold levels near 21, a short-term bounce is possible. Yet the MACD remains deeply negative, suggesting the overall trend leans bearish, unless Friday's U.S. Nonfarm Payrolls (NFP) report at 12:30 GMT surprises us with softer-than-expected data, potentially sparking a reversal. Now, let's talk about why silver matters. This precious metal, though less popular than gold, plays a vital role in investment portfolios for diversification, intrinsic value, and potential inflation hedging. Investors can purchase physical silver in coins or bars, or opt for exchange-traded funds, ETFs that mirror its global market price. Silver prices are influenced by a myriad of factors. Economic uncertainties and recession fears can drive silver higher due to its safe haven status, albeit to a lesser degree than gold. As a non-yielding asset, silver tends to appreciate with lower interest rates. The performance of the U.S. dollar also impacts silver prices, given that the metal is denominated in dollars, XAGUSD. A strong dollar usually caps silver prices, while a weak dollar often boosts them. Other drivers include investment demand, mining supply, silver is more abundant than gold, and recycling rates. Industrially, silver is indispensable in sectors like electronics and solar energy due to its exceptional electrical conductivity. Fluctuations in demand and supply, especially in major economies like the U.S., China, and India, significantly influence silver prices. Interestingly, silver often mirrors gold's movements. When gold rises, silver typically follows, given their shared safe haven status. the gold-silver ratio, which measures how many ounces of silver are needed to match 1 ounce of gold, can offer insights into the relative valuations of these metals. A high ratio might suggest silver is undervalued, while a low ratio could indicate gold is undervalued. Before diving into silver investments, remember that the information provided here is for educational purposes only. Markets are inherently unpredictable, and investing carries risks, including the potential loss of your entire investment. Always conduct thorough research and consult with a financial advisor before making any investment decisions. In conclusion, while the current outlook for silver seems bearish, the market is always subject to unexpected turns. So, stay tuned and keep an eye on key economic indicators like the NFP report. What do you think? Are we seeing the beginning of a significant correction, or is this just a minor dip? Share your thoughts in the comments below.